Good morning. Welcome to Almus Market Morning. Global markets had another weak session yesterday, particularly in US markets, where the initial strong rally was completely erased and stocks closed more than 1% lower. There was a mixed bag of data, higher jobless claims, and improved Philly Fed manufacturing index, one of the regional indicators. But they were not major factors. Jobless claims were higher mainly because of Omicron effect, which is seen as temporary. Overall employment situation having actually improved. US yields dropped after the data immediately, but rebounded after we saw poor demand for fresh bond issues. Demand for the 16 billion auction, the tips was soft on Thursday, with notes selling more than 2 basis points above where they traded before the sale. Market look headed to be subdued for the next few sessions with lack of major data and investors sitting on their hands ahead of the Fed meet. Whatever the market may believe, in one of her television interviews, Yellen said that US inflation may fall to 2% by the end of 2022, and the central bank is doing its job. So dollar found its support with firmer yields and risk of creating safe haven demand. Euro unable to build on its gains despite a recent spate of good data and record inflation, with the market now actually discounting a 10 BP rise in rates by September. Yen and gold have been strong amid a weak risk environment. Crude oil seems to be heading into a correction after the strong rise as market seems overbought, anticipating the near consensus 100 target. Technicals point to some downside from here, but needs a trigger from OPEC to see any meaningful correction. USD/INR has fallen into a narrower range between 74.30 and 74.70. Again, capital flows, rather corporate flows, have been driving the rates lower, while intervention seems to be quite strong at lower levels. Yesterday we had two-way flows, starting with some bond flows, and then later on we also heard about outflows for a large corporate as well. So I think this will continue in terms of rupee for the next 1 week also, maybe 74.10 to 74.80 as we head into the crucial budget. Before that, of course, we have the FOMC, where any surprises can swing the market out of this range. Thank you.
It seems that yesterday evening, buy USD against developed market and sell equity seems was the theme before Fed meeting. There was also buying seen in yen on a risk aversion sentiments and fears of heated inflation. Yen is currently dealing at 113.80 and the euro at 1.1320 and GBP at 1.3580. It seems that the market is now getting worried on a supply chain disruption in China. And that's what I think the focus of Biden is in coming days. Except Chinese currency, today morning, all Asian currencies are dealing weaker against USD, following strong USD index and risk aversion. On a risk aversion sentiments and some geopolitical concerns, gold maintained its gain during the weekend, dealing at 1840 per ounce. And a sustainedness above 1835 or 1830, it might cross 1855.60, and then it will become a kind of a bull or maybe a good chart which will give probably more positive returns. We saw Treasuries a good buying interest yesterday evening and day before also, and this led into a 13 basis fall in a 10-year USD from 190 levels and now dealing at 1.77. In my view, 170, 175 is a very strong support zone, and from there the yield shall start moving higher again. 2-year US yield is dealing at 1.01%. Indian 10-year yield closed at 661, mostly unchanged than a previous close. We saw some erratic move yesterday in Indian money market. Call rates and repo rates have moved higher than the 4%. And that was a little surprising looking at the overall liquidity in the system. But due to temporary mismatch of variable reverse rate repos done by RBI and some GST outflows, and people have also news that Reliance paid 30,000 crores of a spectrum fees to the government. So this sucked out the liquidity, and suddenly call rates have moved higher than 4%. And due to this, RBI conducted a variable rate repo rate auction rather than a reverse rate auction. Yesterday, RBI conducted a 50,000 crores of a variable rate repo auction. Yeah, that's all from me. Thank you. Have a nice day and have a nice weekend.